Hello, everyone, and thank you for joining me today for our webinar on beginner's technical analysis. I am Joseph Goodman with PlusOption, and today's webinar is going to be dedicated to you new traders just starting out with us. Today we're going to be introducing you to technical analysis as well as Japanese candlestick charts. We will touch upon a few technical indicators such as support and resistance, and RSI. We have a lot of you joining us today, so very big crowd. I want to thank you all for joining us, and at the end of the webinar, we're going to hold a little Q&A. So I do ask that you do hold your questions for the end, and we will try to get to them all. So, what is technical analysis? Technical analysis is a trading tool used to evaluate assets and attempt to forecast their future movement by analyzing statistics gathered from trading activity, such as price movement and volume. Unlike fundamental analysts who attempt to evaluate an asset's true intrinsic value, technical analysts focus on charts of price movement and various analytical tools to evaluate a security's strength or weakness and forecast future price changes. Technical analysts believe past trading activity and price changes of an asset are better indicators of the asset's likely future price movements than the true intrinsic value of an asset. Today, we will be introduced to the most popular type of chart used by technical analysts and then touch upon a few technical indicators. These technical indicators use complex mathematical equations in order to show us things we can't see just by looking at a chart with our naked eye. So let's begin. You'll see here I have many what we call Japanese candlestick charts. So before we get to that, you'll notice I'm using Net Danya. I do recommend that all of you out there do sign up for a free account with Net Danya. That way you will be able to save your workstation, which this is my workstation. So, Japanese candlestick charts. A Japanese candlestick chart is a combination of a bar chart and a line chart, and it shows price movement over time. So, along the x-axis, the horizontal axis, we have time, and along the y-axis, the vertical axis, we have price, which is separated by pips. For those of you who are unaware of what a pip is, it is the fourth digit from the decimal place. So the measurement of time is quite changeable using what we call the time scale here. You'll see we're selecting 1H right now. It means each of these are all candlesticks, by the way. Each of these candlesticks now represents 1 hour in time. I can have them represent 1 minute in time. I can have them represent a day, a week, a month. I have plenty of options to choose from. And the selection of time scale will be very closely in tune with your preferred trading time horizon, which we're going to speak about later. Let's get a little closer into this chart. We can see that we have two different types of candles. We have the blues and the reds. They might appear orange to you, but they are supposed to be red. And each candle has two different parts. We have a colored part, which is the body, and then above and below, we see a spike, which is sometimes called a wick or a shadow. So let's talk about what these two parts are. In this one candle, we see a small spike below and a larger spike above. So the top of this spike and the bottom of this spike, this is showing us the price range for the specified time period. This specific hour, the price of the Euro USD fell as low as here and went as high as here. So moving on to the body tells us the opening and closing price for that time period. for the blue candles, the opening price will be found here on the bottom. It will be the first price of that time period, and the last price will be the top of the body, showing a price increase. However, the red candles, they show a price decrease over that specified time period. Now, the wick, the spikes are the same. They just show the price range, but the body is different. Now, the top of the candle shows the opening price, the first price of that period, and the bottom of the candle shows the closing or last price for that period. So, does the word trends ring a bell? Trends are something we are always on the lookout for. We look at this chart. We see the prices constantly moving up, down, up, down, up, down, like a roller coaster. But you can see over a long time period, there is a general direction for the price, for the direction of the price. This would be the trend. Here is an example of a downtrend. Now we have three different types of trends: downtrend, uptrend, and let's see if we can find an example of a sideways trend right around here. A lot of movement up and down, but in the beginning and the end, we're just about level. So trends have three different time lengths in traditional trading, that is. In traditional trading, a short-term trend is usually less than 2 weeks. An intermediate trend, 2 to 8 weeks. Long-term trend between 26 and 52 weeks. Now for our binary trading, we're going to be locating much shorter trends because our trading time horizon will also be shorter than that of traditional trading. Now trends are extremely important. And I want to give you a rhyme to remember. A trend can be your friend, but all trends come to an end. So now let's take a look at a couple of technical indicators that will help us determine when a trend may come to an end. So let's talk first about support and resistance. One of the most widely used concepts in technical trading refers to price levels of an asset that tend to act as barriers from preventing the price of that asset from getting pushed in a certain direction. So this could be a good point for a reversal and signal a good entry point for a trade. A reversal merely refers to a change in the direction of a price trend. Like here, we have a downtrend that reverses upwards. So we're going to learn how to draw support lines, which would be a price floor preventing price from dropping below, as well as resistance lines, which we could think of as a price ceiling, which prevents prices from climbing up. It's important to know that support and resistance levels are not impenetrable forces, however. They can in fact be broken, and the number of times that they hold the price determines their strength. So we're going to look at a couple of examples. Okay, so since technical analysis requires studying the past movements of an asset, that's exactly how we're going to learn it. We're going to learn it by looking into the past. Okay, so let's just see what I can pull up here. I'm going to try to find a good place to draw for us a resistance level. Well, okay, so we have these 2 points. They seem to end right around the same price. So what we can do, if we want to draw a resistance line here, we go to lines, add line, horizontal freehand, And that changes our mouse into a drawing tool. And we draw it right where the two lines meet. So now we have a point of resistance. And what we're going to be doing is following into the future. We're going to save this line, and we're going to, once the price approaches that line, we're going to look for one of two things. We're going to look for that price to either hit that line and then bounce back down, or for the price to break right through. So let's see if this gives us any examples, this asset right here. You're going to have to bear with me, guys. We're going to be pretending here. Since we are studying the past movements, we have to pretend like we are in the past. So let's pretend that we drew this line back at the beginning of January, and we're following it forward. And we're looking for the price to approach that line. Let's see if we have any opportunities here. All right, the price is climbing back up, coming towards my line. Now, it's very important, for me at least, that I see the price actually hit the line. There are traders out there that will take trades before an actual resistance line is hit. I don't recommend it, especially for those just starting out. So let's continue to watch and see if we can see the price actually hit that line. Not in this example. But what we do have at 1.4354 on the EuroCAD is a future level that we can be on the lookout for, okay? Now it's important that it's on a 1-hour chart. Each of these charts will tell a different story, and it will affect our trading. So right now we're on a 1-hour chart. And this would be a good price level to save for the future, 1.4354. I want to see if I can pull up a better example. Euro JPY. Okay, so it appears that this would be a good place for us to draw another resistance line. When an uptrend occurs, resistance levels are formed as price action shows and starts to pull back. So let's go ahead and draw us another resistance line. So once again, we are going to watch this line, see if the price comes close to it. Okay. So here we would have a breakthrough. Now, for our just starting out, we're not going to be trading on the breakthrough. So we are going to forego this opportunity. And this is exactly why, because it can lead to a breakthrough that is a continuing uptrend. And what we are looking for right now is a reversal. So let's continue to wait. Okay, so also not the best example. But there's another level we can draw. There are several levels of support and resistance. So if we come here, we can see that the price seems to be held up here in numerous points. This would indicate to us very much strength with this resistance. So let's see if we can have any examples here. Okay, we see our prices approaching. Now this would probably be close enough for us to take the trade. So since we are on an 8-hour chart, we are going to use the rule of Quattro, meaning we multiply whatever time scale we're using by 4. So we're trading about a day and a half here, 32 hours, basically 4 candles. So if we saw the price hit this resistance line here, we would want to take a put position for 30. It would probably be, say you were trading on Wednesday, an end of week trade would be perfect. So we can see here, if we took a 4-period put from this point, we see the price does start to come back down. Let's see if we have any other opportunities. We have the price coming close to the support, but then again, we wanted to actually hit that resistance level. Sorry, not support. So this would be another good resistance level for those of you to draw out there on your Euro JPY charts on the 8-hour. We do have an increase, an uptrend over the past few days, so we could see the price approach that resistance line. Okay, so now let's talk about support instead of resistance. So support would now be, a price floor. We're coming down to the bottom here. We're looking for a good bottom point to draw. So when a downtrend occurs, support levels are formed. Let's see if we can find an example in the EuroCAD. 1-hour chart in December. We have a perfect point here. Okay, so I would like to draw my support line here. Why am I drawing my support line here? Because we have a downtrend coming to a stop here, and we also see that point met right here with support. So now what we can do, well, let's erase this just so we're not getting confused. And let's follow that asset forward to see if we have any more trading opportunities. Okay, we have one coming up. Here we go. This would be a good opportunity for us to take the trade, not on this candle, but on this one. So in this instance, if we're on the 1-hour chart, we would be taking a call position for 4 hours. So let's see what would happen thereafter. Okay. 1, 2, 3, 4. We can see we're definitely deep in the money there had we taken that trade. Let's see what else we got coming up. We want to see the line actually hit that support level. Okay, we might not have any opportunities here, but this will be another good level for those of you to draw and to watch for the future. On the EuroCAD, 1 hour, 1.3861 is a nice support level for you there. Let's see if we can find any other examples. Okay, so here we have a nice downtrend that is showing us this particular point here. So I have a line down here. I'm just going to go ahead and bring it up right to here. Okay, so we see now we have this support level that's been hit twice by the price of the Euro JPY, and afterwards reverse back up. So let's see if we can use that for any further trading opportunities. Okay, so here we see a breakthrough. I don't recommend trading on the breakthroughs. What we want to see is it bounce right off the line. Okay, and we see that here. So here may be a good opportunity for us to place a call. Looks like we're on an 8-hour chart, so we're going to be trading for about a day and a half. But for our intents and purposes here, we're looking at 4 candles. And 1, 2, 3, 4. We do see that that would have been a winner. Let's see what else we can find. All right, the price is coming close, but we need it to actually hit the line. Let's see, we might not have any more opportunities here. No, the price is just on the way up, but this is a level that you could keep for the future on the Euro JPY 8-hour chart, 112.22. And let's see if we can find one more example. Three very close trading sessions hitting the same line. That is a clear point of support for me, and I will draw a line there. So moving forward, let's see what trading opportunities this might yield for us. Okay, here we have the price hitting and bouncing off the line. Perfect opportunity for us to take a call position, and since, well, we're not taking this call position right now, we're having to pretend that we were trading in the past. Unfortunately, it can take a very long time to find these support and resistance lines. Then you have to wait for them to become active. And that's just not something we can do in a 1-hour webinar. So this is, rewinding into the past is the only way we can do this. So here we have another example where we can take a call. And since we're on the day chart, we're going to take that for 4 days. So pretty much an end of week trade. And let's see what happens. 1, 2, 3, 4. We see that that one would have brought us success. Let's see what else, if we have any other opportunities here. No. But once again, this is a good level that you can draw and save for the future on the AUD/USD day chart, 0.7148. All right. So that's it for our support and resistance. Now let's talk quickly about the RSI, which is the Relative Strength Index. It's a technical momentum indicator that compares the magnitude of recent gains to recent losses in an attempt to determine overbought and oversold conditions of an asset. Overbought, we can think of as overpriced. It's not exactly the same thing, but for our intents and purposes, it will help us. And oversold, we can think of as underpriced. Once again, it's not exactly the same, but we will use that for our example. So let's open this Euro USD chart. I'll close this one. So say I want to apply the RSI to my chart. I'll come here to Studies and click RSI, Add, OK. We're just going to be using default settings this time around. And here we have it, our RSI. We can see that it's on a scale from 0 to 100, with 50 as what we would be calling fairly priced. And so we're watching two particular levels. We're going to be watching 30 and below and 70 and above. Let's do an example first with the 70 or above. So what we can do here is draw a line, just like we did on our graphs, to mark the 70 and make it more visible for us. Get it as close to 70 as I can. Okay. So let's rewind and see what we can find. Now, what we are looking for with the RSI 70, and sure, we're watching the charts, but now we're also watching this RSI, and what we want to see is the RSI cross above 70. Now we have our attention locked on this asset, and the next thing we are waiting for is for that price to cross back below the 70, which would trigger our trading decision. And you see, right on this candle is where it crosses back below the 70, and this indicates to us a reversal. So it'd be a great opportunity to take a put position. And since we're on a 15-minute chart, that would be for a 1-hour trade. So that would be taken right at this candle, and you can see 1, 2, 3, 4 candles later, an hour later, the price is much lower. Let's continue to watch and see if we can find more examples. We want it to actually cross above the 70, not just come close to it. Okay, so we have it crossing above the 70, and now we're waiting for it to cross back below, which happens right between these candles. The price would have been right around here, and what we want to do is that we would take a 1 hour put on that, and let's see what happens next. Okay, so let me just take this opportunity to mention to you out there that none of these technical indicators have 100% success rate. That being said, this would have had a false indication to us. We would have traded just around here, 1, 2, 3. Yes, that would have actually been a losing trade for us. However, before the trade expires, we see the RSI hit 70 again, which definitely give us an opportunity to hedge that trade with another. And say we saw the crossover right here on the 70, in this candle. That's where we would take our 1 hour put. Let's see. Now the RSI is working like it's supposed to. We see the price reverse back down, and any put positions taken for an hour most likely would have landed in the money. See if we see any other opportunities. We have it coming close, not quite there. Yeah, very close. Looks like it would have been a good trade, but still, we want it to hit the 70, especially when you're just starting out. You want to very clearly follow directions. Here, it would have been a winning trade if you took the reversal, but I'm not recommending it. See if we have any other opportunities. Okay, it has crossed above the 70, way above, and now here is where we see it cross below. This is where we would take a trade, 1 hour put, and we do have a steady decline thereafter. That would have been a good one for us. Another opportunity here, right on this candle. Okay, that's where we would say we were watching it live. We see the crossover. It's right between these two candles. We're taking that 1 hour put, and we do see a price decrease thereafter. See if we have just one more example with the Euro USD. Not quite, but this is something you can apply and start trading with today. Unlike the supporter resistance, RSIs can have an instant impact. Luckily, we have math on our side. This technical indicator, it's showing us something our eyes just can't see. Supports and resistances, so we usually have to find ourselves. But RSI, we apply, learn how to use it, and follow the directions. Okay, so we can also use the RSI in the other direction. This would be an overbought example. Now let's look at an oversold example. Let's take a look at Brent. Okay, so we already have our RSI applied here. Now what we're looking for, okay, let's go ahead and draw that line to mark the 30 just to make it more visible for us. Okay. Well, very rocky road over here. Let's see what we can do. Just one moment here. Okay. So let's go to the 1 hour chart instead. Add line. horizontal freehand. See if we can find some examples looking back. All right, so very rocky road here. Let's just jump in right here. We see the RSI dip below 30. Let's get rid of this line just so we're not confused. Okay, and we want it to cross back above 30 before we're taking our trade. And that would be right on this candle. If we put it over here, we can have more of a live effect. But we are not live. Take that into consideration, traders. So it would have been right around this price point. So in this situation, we're looking for a reversal upwards. We're going to take a call position in this case. And if we're on a 1-hour chart, we'd be looking at a 4-hour expiry. So from this candle, let's see what happens moving forward. We do see an uptrend. Okay, let's see if we have any other examples with our RSI. Not so much. And we do want to see it actually hit the 30. And I'm not seeing plenty of, okay, here we have one. We have the price crossing below 30 here. And it does not cross back above, it bounces back down, and then crosses above. Right within the bottom portion of this candle is where we would have taken our 4-hour call position. Let's see what it would have. Oh, okay. Once again, we're never going to see, we cannot go in there hoping for a 100% success rate. And this is an instance where the RSI does not seem to work. Let's see if we have one more example. It doesn't quite hit the line there, so okay, so that's all we have for now. And the market right now is just showing us just about fairly priced. Okay, so these are the technical indicators I wanted to share with you today. For those of you planning on joining us next week, we'll be continuing from today's material. We will discuss technical indicators such as MACD and exponential moving averages. Everyone who attended here today will certainly receive a registration link in their email. And if any of you out there are interested in a one-on-one session with myself, in which I can personally answer all of your questions, please feel free to contact your account manager and make such an inquiry. So we've had a very big crowd here today, and I want to thank all of you for joining. Now we're going to hold a little Q&A. We have a couple spare minutes. I'll try to get to as many questions as I can. And if you don't happen to have your question answered, you can send me an email to josephgo@plusoption.com, or once again, speak with an account manager and request a one-on-one session with myself. So let's see if we can get to some questions. Feel free to start writing your questions. And I see that some of us here have had some issues with the sound. I'm just seeing this now, and I apologize if things weren't 100% audible. However, it appears all of you have stayed until the very end, so you must be hearing something. I'm going to wait around another minute or two for questions. And I do ask that questions pertain to the materials that we discussed today. We're not going to be moving forward until next week. And for instance, I won't be answering questions on penny stocks. We're dealing with binary options here, commodities, and currency pairs. So please try to keep the questions relevant. And it appears that our webinar was quite clear because I'm not seeing questions. Wait just another couple of seconds. All right, and Okay, so if no one's going to be asking us questions, then we're going to wrap it up for today, and I hope you all join us next week for our next webinar. So have a great day, all of you, and best of luck trading.